Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how are you?
I'm doing great. Really interesting week. President Trump, and to some extent the overall marketplace, is really demanding an additional, potentially larger rate cut. So Fed Chairman Powell, I know he's ascending the Grand Tetons in Jackson Hole this week. Will he be more hawkish or potentially stick with that dovish tune he's been singing?
Well, you know, Jeff, the media and everyone else is going to be absolutely just looking at every single word he says, and I'm not sure he's really going to give the clarity that the media is looking for.
And that's right, and we're seeing actually a little bit of dissent in between his Fed governors. Fed President George today talked about being a little more prudent and waiting. That put a little pressure on the E-mini S&P 500 after she made that remark.
Absolutely, and you know we've seen those E-minis and we've seen the S&P come up to that level around 2950 and then just kind of bounce right down below that.
No, that's a great point. We are a little bit of range bound. But are you ready for this first lightning round, Scott?
Yeah, let's do it.
Rate bounce. Well, all the talk has been about the Treasury. We saw an intraday inversion between the 2-year and 10-year. We're also seeing that again today, but it has been a wild ride in the 10-year note. Are we going to see a bounce in yields and a move lower in price because they're correlated from an inverse perspective?
Yeah, I actually think that's the move that may happen here. It seems like the marketplace is looking for yields to actually go down. I'm kind of looking at the opposite of that.
Well, what type of trade example would you approach this potential move back up to 2% in the 10-year yield?
Well, I'd like to buy a week 5, 130, 128 10-year put spread, which expires on August 30th. And this spread will potentially cost an investor about $96.
This makes a lot of sense. If we do see the yields move higher, which of course is going to correlate to the prices moving lower, the December future contract was trading at 131 even half when we priced out this trade example. And the at-the-money volatility, Scott, 5.6%.
Right, we talk about that volatility a lot, and that's just a nice level for premium if you're going to buy it here.
Yeah, and if you wanted to be a little bit of a contrarian here, as we do see yields globally moving lower, this will allow maybe a little back and fill on the chart for this trade example.
Absolutely.
Great stuff, Scott, and please remember these are trade examples, not trade recommendations. Let's move into the second lightning round.
All right, let's do it.
Roller coaster. Well, it has been a roller coaster. We talked a little bit about range bound, but it's been such a vivacious move. Every time we see a conversation about recession, then we have no recession. So the E-mini S&P 500 has just been a wild ride again.
No doubt about it. And we've seen it come up to that 2950 level a few times here and then back off. So, you know, who knows what's going to happen here.
Well, you hit the nail on the head. For my trade example, I want to be a seller of a call spread. And that 2950 level, it has been the higher end of the range. So I want to be a seller of the end of the month E-mini S&P 500, 2965, 3,000 call spread. That also expires on August 30th. And this call spread will allow an investor to potentially collect $285, Scott.
And the SEP futures were trading about 2907 there. And at the money vol, though not quite as high as it's been in the last couple weeks, still fairly elevated at 17.89%.
It is elevated, but do we have one more approach? Do we have a little bonus round today, Scott, for this?
Yeah, we absolutely do. And you know, an investor could potentially use the micro E-mini futures as another way to express this view. Could potentially sell 5 micro E-minis at 29.35 and then look to buy them in, you know, perhaps every 15 points till they get down to about 28.60, which has shown to be some nice support.
This makes a lot of sense. Remember, if you're utilizing futures, either the micro E-mini futures or the E-mini futures, always use stops. So an example like this, I would use a stop to buy back all 5 at 29.65, which kind of hits on that resistance level which you talked about earlier, Scott.
Absolutely. It's very prudent to have that in there.
All right, Scott, thanks as always for coming on Striking Options, and please tune in every week as we will continue to strike options.